This is FSC's Financial Forum, where we explore topics related to securities, insurance, and private pensions, as well as the regulatory environment within which these industries operate. Today we share excerpts of the informative presentations we have had over the past 3 weeks, including President of the Pension Fund Association of Jamaica, Mrs. Sonia Goff, Communications Officer at the FSC, Mr. David Ansah, and National Coordinator of the National Financial Inclusion Strategy, Ms. Melanie Williams. Hello, my name is David Geddes. I'm the Director of Stakeholder Engagement, Communication and International Relations at the Financial Services Commission, FSC. FSC was established in 2001 to promote integrity in the financial sector and protect consumers of financial services in the non-deposit-taking financial sector. The FSC and the Bank of Jamaica together regulate and supervise Jamaica's trillion-dollar financial sector.
FSC was established as part of a response that policymakers had to the crisis, the financial sector crisis of the mid-1990s, the mid to late 1990s. Policymakers realized from the experiences of the crisis, which was costly. It was costly to both Jamaican society and to the economy. And in order to prevent such an occurrence, they took a very in-depth look at the causes of the crisis. And what was realized, among other things, was that the crisis reflected, in part, a failure of governance within the financial institutions, broadly speaking. Right. It was also recognized, too, that the regulatory framework was not strong enough to enable regulators to quickly identify and to curtail certain kinds of risk behaviors that had emerged.
It is evident that you play a big part in financial stability. What is the relationship between FSC and Bank of Jamaica? I would classify that relationship as being a brother and a sister relationship. We are both regulators for the financial market. The Bank of Jamaica regulates deposit-taking institutions, banks, building societies, credit unions, merchant banks. We regulate the non-deposit-taking sector, but oftentimes there is a lot of overlap, primarily because you do have within the same group of companies. You do have a banking entity and a non-deposit-taking entity. And so the Bank of Jamaica is charged with regulating the group, but there's a significant level of collaboration and coordination that occurs with the FSC to ensure that the sector overall, the entire financial sector, is being supervised effectively. So we share information on a routine basis, both supervisory information and information on specific entities that may be of concern. We collaborate with regards to the strengthening of financial sector legislation. And we also participate very actively on certain statutory committees that have been formed by the policymakers to enable the regulators to have a full overview of the financial stability of the sector.
Mrs. Sonia Goff is a renowned attorney at law and advocate for pension reform and social security development in Jamaica. Mrs. Goff is an Eisenhower Fellow 2020 and serves as a Director of NCB Financial Group Limited, National Commercial Bank Jamaica Limited, Jamaica Producers Group Limited, the National Insurance Fund, Adult Learning Centers of Jamaica, and is Chairman of Stratus Alternative Funds SCC. She is also President of the Pensions Industry Association of Jamaica.
I am Sonia Goff, Attorney at Law and President of the Pension Industry Association of Jamaica. Today I want to explore 3 ways a regulator of the pension industry can support sustainable, adequate retirement security in Jamaica. We'll be discussing facilitating a wider diversity of investments at the appropriate level of risk, reimagining ways to achieve retirement security, and being a driver of financial literacy. Pension fund assets, accounting for just under 700 billion Jamaican dollars, represent the largest single pool of investable funds in Jamaica and investment managers and trustees are hungry for diversification. The current regulations impose quantitative and qualitative limits based on asset class, jurisdiction, type of transaction, and concentration. While there has been some recent liberalization, including expanding foreign currency limits and the ability to now invest in Jamaican private equity, we need to move away from the prevailing one-size-fits-all approach to pension investing. Risk tolerances vary by pension fund and may vary over the life of a specific pension fund. Using life cycle rather than straight investment limits can have a positive impact on pension fund portfolio construction, allowing for greater diversification and ultimately higher pension fund returns. The FSC's pending implementation of a risk-based approach to the supervision of the financial industry is a welcome one. However, the investment regulations need to allow the regulator to also apply a risk-based approach to investment allowances and investment risk management, not just compliance. Applying a risk-based approach facilitates funds being able to effectively improve the hunt for returns at the most acceptable risk for that plan, at all times ensuring that the best interests of the ultimate beneficiaries of the plan are preserved. Pension funds are naturally long-term investors due to the long maturities of their liabilities. Under the right conditions, pension fund capital can contribute to the development of the real economy and drive growth. But this can only occur when the regulatory environment is flexible and adaptable to foster the growth, and the regulator is also enabled with the power to give the necessary support and supervision. We must strive for an environment that doesn't shrink the pension industry, but attracts more and more employers to set up new and novel pension arrangements and enroll new contributors who earn in more flexible arrangements and who want pensions too. A few possible solutions and approaches our regulator could consider include auto-enrollment. Auto-enrollment is a program where a worker who is not in an employer-sponsored pension plan is automatically placed in an approved retirement scheme and must make the active choice to be taken out of the scheme. It is essentially a change in the choice architecture, but the ability to always opt out maintains individual choice and responsibility for the decision to participate in the plan. People often suffer from behavioral biases and limited financial knowledge that prevent them from joining voluntary pension arrangements early enough to build a meaningful pension. Auto-enrollment ensures savings occurs alongside the paycheck, and it significantly simplifies the process for identifying and starting a retirement account. Another strategy to encourage savings could be the implementation of a micro-pensions framework for low-income and informal workers. Micro-pensions is the concept of making very small contributions to a pension arrangement, but these contributions are made more often than you would in your traditional pension arrangement. Imagine text messages that prompt you to make a small contribution deducted from phone credit, or possibly a bank account. Or perhaps at a gas station or grocery store, you're prompted to top up or round up your payment, and that excess goes to your pension account. You don't have to think about it, and it's not burdensome. Both auto-enrollment and micro-pensions are examples of redesigning the traditional means of pension savings so that you no longer see retirement savings as something challenging. The heavy work is done for you. The Pension Industry Association of Jamaica is separately working on a concept paper to propose the introduction of an auto-enrollment program in Jamaica. I know the FSC is also exploring the feasibility of micro-pensions, and the PIAJ stands ready to support the FSC in this regard and any other initiative that will meaningfully and sustainably improve pension coverage. We can all agree that there is an urgent need to increase the financial literacy of Jamaicans, and the regulator has a critical role to play in financial education. People see the regulator as independent and likely to provide information that isn't biased or tailored towards a particular financial product or service. The development of regular exposure to financial education increases knowledge and confidence, leading to increased satisfaction and ultimately driving an individual to act in their own best financial interest. The OECD has published principles and good practices for financial education and awareness, recommending that financial education be considered in the regulatory and administrative framework of a country and used as a tool to promote economic growth, confidence, and stability. Financial education should be seen as a necessary complement to financial regulation. Financial education programs mean more than just passing financial information along, but should be designed to meet the needs and the financial literacy levels of the target audience, as well as reflect how the target audience prefers to receive information. Financial education should also be regarded as a lifetime, ongoing, and continuous process, in particular, in order to take account of the increased complexity of markets, varying needs at different life stages, and increasingly complex information. Some good practices recommended by the OECD include national campaigns to raise awareness of financial risk and ways to protect against financial risk through adequate savings, insurance, and financial education. Starting financial education in school. People should be educated about financial matters as early as possible in their lives, and also making financial education a part of state welfare assistance programs. Finally, using websites, and I would also add social media platforms, should be promoted to provide relevant, user-friendly financial information to the public. The income derived from a pension in the majority of cases is what determines whether we're able to lead an independent and dignified life after formal retirement. While we strive to establish a first-class pension framework with a modern, forward-thinking, and adaptable regulator, reality is the process to get there is a marathon, not a sprint. And just like training for a marathon is a team effort involving coaches, trainers, support from friends and family, pushing Jamaica to a first-class pension system requires a team effort from all stakeholders, the regulators, investment managers, administrators, sponsors, and trustees. This is me after my first and only so far marathon in 2013, the San Francisco Marathon. I nearly died. And though pension reform is a marathon and often a long and arduous process, we don't want to look like me at the end of it. So it will take continuous, frank, and transparent dialogue, striking the right balance between all the various interests and expectations of stakeholders, maintaining a healthy tension between the regulator and the regulated. At the end of the day, we are all striving for the same result: adequate and sustainable retirement security for all Jamaicans and the elimination of old age poverty. It is possible. We can get there. Thank you.
Attorney at law and president of the Pensions Fund Association of Jamaica, Mrs. Sanya Goff. FSC's communications officer, David Answer, who has delivered numerous presentations to youth, vulnerable women, and the disabled, is a graduate of the University of the West Indies and is responsible for FSC's social media platforms and coordinating outreach activities.
One of the FSC's major initiatives is the School's Financial Education Program, SFEP, which was launched to act as a vehicle for tackling some of the challenges the Jamaican financial sector faces today: high cash reliance, financial vulnerability, inadequate financing, and a general distrust and lack of confidence in the financial system. To combat these challenges, SFEP provides the students with the opportunity to hone a very critical skill set that is integral to their personal and professional development. SFEP not only caters to the needs of their financial development, but also appeals to development of their soft skills, critical thinking, and public speaking abilities. Students who participate in SFEP become opinion leaders among their peers in conversations about personal finance and become ambassadors of financial literacy and inclusion, not only promoting the need to become financially literate, but also by spreading awareness of the important financial institutions that govern the financial industry. By creating these ambassadors of personal finance, the FSC has managed to initiate a domino effect of mutual teaching and learning within schools across Jamaica participating in the program. We believe that this is the basis of a strong and growing network of sharing useful information that can empower an entire demographic to do tremendous things, predicated on sound financial decision making. SFEP has had a history of making a positive impact on the lives of our youth, and we will continue to operate with this at the forefront of our minds as we continue to do our best to promote integrity in the Jamaican financial sector. The participants also benefit from interactive presentations from members of the FSC team, where they are introduced to the role and function of the FSC and its fellow local regulatory bodies. The FSC believes that these skills are the foundation of a sound and successful future, and we encourage our participating students to apply their knowledge in various forms. Our annual jingle, essay, and video competitions are important components of SFEP, as they encourage our students to call on their creativity in sharing their understanding of the curriculum delivered to them. Again, we are focusing on honing skills in applying knowledge and building interpersonal skills like teamwork, etiquette, critical thinking, and public speaking, which are critical elements of SFEP. SFEP has assisted the development of our youth by creating student ambassadors promoting sound financial decision-making and leaders among their peers by equipping them with the knowledge needed to build a solid financial foundation at an early stage in their formative years. SFEP has done this for over 6,000 students over a decade of implementing this initiative, and we look forward to more decades of making leaders and contributing to the development of our people and, by extension, Jamaica. We have reaped many successes with SFEP, and a large part of that is due to the many teachers who have joined forces with us and Junior Achievement. Today we say thanks to our educators. We also thank the nurses and policemen and women who have always invited us to their annual conventions, giving us a platform to recruit more ambassadors of financial literacy and an audience eager to learn more about financial inclusion and literacy so they too can share the knowledge. The future is bright for our country and its people. And we believe that a regulator of the future which will facilitate development through regulation has an integral role to play in the furtherance of that success. The future presents us with an opportunity to do more and to do better so that we can better serve our stakeholders. Being a better regulator means embracing the future and all that comes with it and doing our utmost to protect our stakeholders. However, to implement these initiatives that will improve and bolster our strategies, we must ensure that investor education is wholesome and need-focused. What do our stakeholders need to know? How do they perceive these personal finance management concepts? Are they likely to adopt sound financial decision-making practices in their daily lives? Information is power, and data collection initiatives stand at the base of this launchpad for success. Through joint collaborations with other key regulatory bodies, we have begun the groundwork in collecting crucial data that will allow us to accurately gauge the proficiency of our stakeholders with common financial concepts and important financial practices and institutions in Jamaica. It is important that our youth are introduced to the full range of financial services available to them. Despite retirement planning being an important part of one's financial development and success, its importance is an undervalued concept to many of our young adults, just as it is for our adults. However, the regulator of the future must be able to bridge the gap of interest and participation through active and instructive marketing that will allow our youth to see the true value and importance of retirement planning. In building these strategies that will reach our youth, we must also embrace the growth and popularity of our cyberspace and the importance of technology as a vehicle for sharing critical information.
Communications Officer and Social Media Coordinator at the Financial Services Commission, Mr. David Ansell. If you have questions or comments, email us at fscfinancialforum2021@gmail.com. We want to hear from you. Melanie Williams has more than 2 decades' experience in corporate finance law, both at the private and public bar, as well as significant expertise in pensions law, securities law, insurance law, trust law, contract negotiation, financial fraud investigations for regulatory breaches, legislative drafting techniques, regulatory policy, and offshore financial law and services. Ms. Williams currently heads the National Financial Inclusion Secretariat at the Central Bank.
Financial inclusion is about improving access to financial services which are offered by regulated financial institutions. We're talking about everyone in the financial industry, from commercial banks, merchant banks, building societies, securities dealers, life and general insurance companies and their intermediaries, and of course, authorized pension fund administrators. Of course, we also recognize the immense contribution made to the financial industry by our credit unions and by our microfinance institutions. Financial inclusion is not just about improving access, it is also about encouraging the usage of financial services. By that we mean we're trying to encourage the underserved population as well as the unbanked population to use financial services which are offered by regulated financial institutions so that they can be better protected. So essentially, financial inclusion is about creating an inclusive economy for households and for firms. It's about micro-entrepreneurs, medium and small-sized enterprises, and citizens, consumers, so that they are protected when they engage with financial institutions. Now, when we speak of financial inclusion, we want you to take a different approach. This is not a top-down policy. This is rather endemic to the Caribbean, and in the case of Jamaica, it is designed to meet the needs of our population where they are now. So consumers need to be comforted that there's a regulator in the space that will protect them if they do have a dispute with a financial institution, and that they will have an easy, quick process to resolving any issues or concerns that they may have. In addition to consumer protection, of course, there is financial literacy. Consumers need to understand the products that are being presented to them. They have to be in simple, straightforward language, free from technical jargon that can confuse. It also means that when we engage with our population, we have to start teaching financial concepts at the earliest opportunity. So there are several teachable moments when it comes to financial literacy. And you and I both know that there are opportunities to share concepts, even at the moment of when you acquire the financial service. But before that, we want to actually teach our youth about critical, basic concepts to do with finance. For example, what is savings versus what is investment? You often have these terms being confused in the minds of many persons, which, as we all know, can sometimes lead innocent consumers to being fooled by persons who are offering Ponzi schemes. Work that the FSC has been keen to prevent in terms of ongoing proliferation in Jamaica. So apart from just teaching our youth generally through social media content and through television, we are actually part of the Consumer Protection Financial Capability Working Group that FSC chairs, which seeks to create financial literacy content for our youth through the work of many different players. And we're starting with the secondary schools. So stay tuned for more information because we'll deep dive into that a little later. Who are the beneficiaries of the National Financial Inclusion Strategy? First of all, the beneficiaries are us as a people, you and I as consumers. But more particularly, it has to do with our citizens of Jamaica or youth, or small, medium-sized, and micro-entrepreneurs. And we're also seeking to benefit many recipients of welfare payments who have the benefit now and the opportunity to obtain these benefits digitally. So financial inclusion. It really seeks to support the work that is contemplated in Vision 2030. And of course, Jamaica's ongoing commitment to Sustainable Development Goals. We're talking about Sustainable Development Goal 4, which has to do with quality education, Sustainable Development Goal 8, which has to do with decent work and economic growth, as well as Sustainable Goal 9, Industry, Innovation and Infrastructure, and Sustainable Development Goal 10, Reducing Inequalities in our economy. So what have been some of the achievements of the National Financial Inclusion Strategy to date? First and foremost, I am very pleased to share with you that there have been recent amendments to our Proceeds of Crime Act and the regulations which allow for simplified customer due diligence requirements or simplified know your customer requirements to be applied to certain categories of consumers based on the assessment of a financial institution. What does that mean? That's a big mouthful. Let me break it down for you. You know how difficult and how painful it can be to open an account. Many of us have often commented that it's almost as if you need a recommendation from God himself to do so. But I'm here to tell you that's not the case. If you are in fact a low risk for money laundering or for financing of terrorism, and the financial institution makes that assessment, and the type of service that you seek to acquire has certain features, certain design factors that further reduce that risk, you may be eligible to use simplified KYC or simplified Know Your Customer requirements to open that account. I must underline that this, of course, is the determination of the financial institution in question when they meet with you. But that means that you will require less in terms of actually meeting the identification requirements to open the account. That's a major achievement, one which we anticipate will benefit many of our low-income population. Another major achievement is that we have seen improvement in the sources of funding and the provision of technical assistance to our micro, small and medium-sized enterprises through a range of vehicles, including the work of the Ministry of Industry, Investment and Commerce, as well as the Development Bank of Jamaica. A significant achievement has been the work which has been done by the Ministry of Industry, Investment and Commerce towards improving the regime that allows for business persons to use what we call movable collateral, aka items such as your equipment, your computers, your cars, as a basis of obtaining a loan from a regulated financial institution. And I'm pleased to let you know that Bank of Jamaica continues to work on improving digital payments for you, the consumer, so that these are accessible and at the appropriate price point for you, which we all can look forward to. So what is the big picture when it comes to financial inclusion? Where do we want to go and where do we want to end up? So our timeline that we are working towards is 2024. And we are working towards improving the levels of financial literacy in our Jamaican population so that you have a better understanding of key financial concepts. We are also working towards having a proper consumer protection regime for that part of the market that is not yet regulated in that way from a consumer protection perspective. And by that I mean our commercial and merchant banks and our building societies, as well as all other entities that are regulated by Bank of Jamaica. So let's understand the big picture about financial inclusion and the work of the Government of Jamaica, Bank of Jamaica, FSC, and all our financial inclusion partners.
Attorney at Law and Coordinator of the National Financial Inclusion Secretariat at the Central Bank, Melanie Williams. If you have questions or comments, email us at fscfinancialforum2021@gmail.com. We want to hear from you. And that's a wrap for FSC's Financial Forum. Like and follow us at FSC Jamaica. I'm David Geddes, encouraging you to check before you invest.
Well lit, but must be legit. Watch your flex, are you wagga vex? Check before you invest. I'm saying, check before you invest. I'm saying, well lit, but it must be legit. If you watch your flex, are you wagga vex? I'm saying, investor and investor are go laugh. How them laugh? Tra la 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 la. A message from the Financial Services Commission promoting integrity in the Jamaican financial sector.